What's going on, guys? Okay, so top oil stocks of 2020. So the week that coronavirus hit, um, I remember the stock market crashed by like 1,000 points, and that whole week it was so volatile that it was crashing by 1,000 points. It was up 500, it was down 500, it was up 1,000, it was down 1,000, and it was the Dow had rallied and crashed by more points, more times in that one week than any time in history. And all I was thinking was, because I've been waiting for this moment, sitting on some cash, waiting for a good crash, a good crisis to take advantage of. And me and my girlfriend went to a cabin for the weekend up in the pines in Arizona, northern Arizona. It was and I just remember I was sitting there watching this insanity ensue, up and down, up and down. And the big thing was the oil crash, because at that time, I think it was Saudi Arabia and Russia. Basically, they were fighting this idea of cutting production, which means that they're basically trying to crash the price of oil. And there was a lot of companies were affected. A lot of energy companies in the U.S. were affected, but oil stocks, nonetheless, are some really good dividend-paying stocks. So I want to kind of go through a couple of the big ones here and just tell you why I think, personally, why I've bought some of these stocks and why I think they're good long-term holds. Number one, ExxonMobil. They're one of the larger oil companies, and they've got a huge amount of assets. They've got, but this is why I like Exxon the most. It's got a really nice dividend, 8.3%. So no matter what, again, you're making a good return, but you're also, there's that guaranteed return. So that's key in stock investing, because what you want is to build a portfolio of long-term payers where they're going to pay you compounding, right? Because it's compound interest, which is really, for a long-term investor, it's the compound interest that's going to make a big impact. Of course, it's great. We all want gains. We all want capital gains right away, but that's just not always feasible unless you're using a more risky strategy like options or futures. And just have a look at this, man. This is, and I'm just going to show you on a 5-year historical. This is, it's $70 to $80 stock, and it crashed down there March 2020. The coronavirus pandemic, $32 a share. That was a good time to buy, and then it jumped up $53 and came back down a little bit. We're around $40. So overall, I think this is a good buy. This is a solid buy. Added to your portfolio, 8% dividend. All right, buy it and sit on it. So you got to think about stocks from a long-term, long-term perspective. There's the max chart, but basically, I think if you don't invest a lot, if you're new to investing, I think the biggest paradigm that you have to break is that capital gains is the goal of investing. It's really not. It's really long-term growth. Of course, it's nice to have both, but you got to look at the climate, the economic climate, and you've got to look at what's going on maybe in the sector, like in this case, the energy sector. They're taking a beating due to numerous factors, and this just goes to show you, this is a pretty solid stock. Over time, it has a history. If you go to the max chart, I mean, this stock is, let's see, 70 to $100, is where it's peaked. And so you want to look at trends. It's definitely low. So this is one of those stocks where you're going to get this dividend yield, which is a great return. I mean, that's a phenomenal return for dividend. And then you've got quite a bit of appreciation here if you hold on to it long term. I mean, you've got at least, maybe a 20% appreciation. This is just a rough number. but you've got nice room for growth. So these are the moves that I like for long term. You buy it, it gives you a return on what you buy, and then you also have capital growth on top of it. But a big mistake I see people make a lot is they always want fast money. They want capital growth right away, and this is a long-term play a little bit. It's going to take a couple years for this to rebound. So if you buy a nice volume of it, you're getting your 8% on your volume, and then you're also going to get that capital gain. So let's apply that to some of the other stocks. BP. This one's a 5.7% dividend, still pretty good. Anything over 4% I think is good. If it's under 4%, I'm not that impressed by it unless you're going to get some massive gains. But here you have, a pretty good potential to double your money, just based on the historical. You can see it breaking 40, 45 to 38 lows. So somewhere between 45 and 38 at a point whenever oil rebounds. So again, you got somewhere to park your cash where you're getting a return, and then you've got that probability of capital gain. So I would say that's also a buy. Of course, you always got higher appreciation. I mean, certain companies like this, they've been around a long time. They've got oh, that's not what I wanted. They're here. Let's take a look at this. Let's look at their financials. They've got pretty stable financials in most cases. Let's see if we're wrong. Yeah, looks like they had some big losses from coronavirus. So that being said, the revenue is still there. Looks like their profit margin got decimated this quarter, but yeah, it looks like they've been hovering around just below profitability for quite some time. That's definitely a sign that it could go lower, but once the financials are released, you get kind of an idea that, how much lower is this going to go? And we saw it bottom out around 16. I would say this would be a watch. Let's watch it and see what happens. You got to consider financials when making purchases, even on large companies like this, because, they got to be solvent. You got to have a certain level of solvency on a stock. For me, I like to see companies that have solvency and a decent profit margin, just to know that their price is sustainable. But overall, still a value buy in my opinion. One that I like based on the dividend is this oil trust. Now, this oil trust is only going to be around for a few more years. Based on the filings. I don't know the details of it, but I would, if you're interested in it, do some research on it. But it's really cheap right now, and it just pays a beautiful dividend. It's a whopping dividend, 31%, and it's low. It's lower than it's ever been. But the way that I look at it is, it's got this solid profitability, probably because it's a paper asset. It's just a trust. So, I don't know how much lower it's going to go, but that dividend is there. So I would load up on that one, and continue to do so. Let's look at one other one. Marathon is MRO. Again, not a crazy attractive dividend on this one, but you can see the capital growth is there. So you want to look for trends, especially when you're analyzing a company. You want to look for trends. This one, Marathon's been unprofitable for almost a year straight. Their profit margin is getting decimated. When you go back to last year, they had a pretty healthy profit margin. So that goes to show you how quickly certain industries, how vulnerable they are to economic, political climates. And then again, I think we're going to start to see a recovery, but this is one of those stocks where it's not paying you a huge dividend. This is a higher risk buy. But I'm not sure how much lower it can go. If you look at kind of a short-term historical, it looks like the lowest was about 320 around there. And you can see a little bit of a trending dip right here. So you can, I'd say follow it and see what happens in the next week or so. This might be a buy, because definitely long-term it's a buy, because you've got a good deal of growth and appreciation on it. So that's it for oil stocks today. But guys, subscribe if you like the content, the information. Let me know what stocks you guys are interested in, what questions you have, and have a great day.